Ever notice how ads always pop up at the worst moments? When the killer's identity is about to be revealed. During that perfect meditation flow. On Amazon Music, we believe in keeping you in the moment. That's why we've got millions of ad-free podcast episodes, so you can stay completely immersed in every story, every reveal, every breath. Download the Amazon Music app and start listening to your favorite podcasts ad-free, included with Prime.
Welcome, everyone. Today, we're taking a deep dive into the August U.S. job numbers. And frankly, this report is causing quite a stir. It seems to be directly challenging some of the narratives we've been hearing about, a booming economy, this golden age of prosperity. But what happens when the actual data, the raw figures, seem to tell a significantly different story? So our mission today is really to unpack these numbers from the Bureau of Labor Statistics. We won't just look at the stats themselves. We want to understand the real pressures they might be revealing, pressures on businesses, the impact on everyday Americans. And interestingly, even how the independence of our economic data collection itself is facing some pretty big challenges right now. We're aiming to give you a clearer picture of the economic reality that's unfolding.
Exactly. And what's really noteworthy here, I think, is how these latest figures don't just, differ slightly from that optimistic golden age story. They seem to fundamentally confront it. Many observers are seeing this as a potential turning point in the economic conversation. It might be exposing some real fragilities that were perhaps hidden beneath the surface.
Okay, let's start by breaking down these August numbers then. The report showed a stark slowdown. Definitely doesn't quite fit that prosperity picture. The U.S. economy added only 22,000 jobs nationwide last month.
Just 22,000.
That's a huge miss, isn't it? Especially compared to expectations.
It is, yeah. Economists were already expecting fairly muted growth, around 80,000 jobs. So 22,000 is dramatically short of even that lower bar.
I mean, it gets more concerning, right? The unemployment rate.
Right. It actually ticked up to 4.3% in August. That's up from 4.2% in July.
And 4.3% is significant.
It is. It marks a nearly 4-year high. It's the highest level we've seen since October 2021.
Okay, so it's not just a blip. This continues a weak trend we saw developing.
Precisely. It follows July's gain, which was adjusted down to only 79,000 jobs. And that was already seen as quite low. So there's a pattern emerging here.
And I understand there's something else telling in these reports, not just the current month's number, but revisions to past months.
Yes, that's a crucial point. The Bureau of Labor Statistics, the BLS, they also reported revisions for previous months. And get this, the economy actually shed 13,000 jobs in June.
Shed jobs.
Yeah.
But wasn't it originally reported as a gain?
Exactly. It completely reverses an originally reported gain of 14,000 for June.
Wow. So a net loss.
Yeah.
When was the last time that happened?
That's the first net loss of jobs since December 2020, which, was right in the thick of the pandemic's economic impact.
So we're not just seeing weakness now, we're finding out past months were weaker than we thought.
That's right. It kind of compounds the current slowdown. It suggests the footing wasn't as solid as previously believed.
So, okay, let's zoom out. If we look at the big picture for 2025 so far, what does this all add up to?
Well, it adds up to something quite significant. For the year to date, through August, the U.S. has added just 598,000 jobs.
598,000 jobs.
598,000. How does that compare historically?
If you take out the unique situation of the pandemic year, 2020, that 598,000 is the fewest jobs added in the first 8 months of any year since 2009.
2009, back during the financial crisis recovery.
Exactly, when the economy was really struggling. And look at the monthly average this summer. It's fallen to about 26,750 jobs per month.
That's a huge drop from last year, isn't it?
Massive. Compare that to the average of 168,000 new jobs per month in 2024. It signals a much, much cooler labor market than many anticipated.
Okay, so given these, frankly, quite surprising figures, it makes you wonder, why is this particular jobs report getting so much attention right now? What's different?
That's a really good question, and it goes beyond just the numbers themselves. It's because this report is tangled up in a political storm. This is the very first jobs report to come out since President Trump fired Erica McIntyre.
Ah, right. The commissioner of the BLS. She was Senate confirmed, wasn't she? Yes, Senate confirmed. And he fired her in early August. That action alone instantly put the integrity of all subsequent data, including this report, under a very intense microscope.
I remember that now. He dismissed the July numbers, didn't he? The ones that had those big downward revisions for May and June.
He did. He claimed the numbers were, quote, rigged and faked.
Said they were manipulated just to make him look bad.
Yes. And he offered no evidence for those claims, but stated he did the right thing by firing her.
Which really brings up this critical issue about the BLS itself.
It really does. The BLS is designed to be independent, nonpartisan. Its data is supposed to be the gold standard, you know? It's crucial for everyone, policymakers, investors, businesses making decisions.
And the reaction to the firing was pretty strong.
Very strong. Economists across the political spectrum condemned it. They warned that politicizing this data threatens its very integrity. It makes it harder for anyone, regardless of their politics, to actually figure out what's truly happening in the economy.
I remember seeing a quote from former Treasury Secretary Janet Yellen.
Yes, she didn't hold back. She called it the kind of thing you would only expect to see in a banana republic. It speaks to how serious undermining that independence is perceived to be. It erodes trust.
So with McIntyre out, who's actually in charge now, did Trump's nominee get confirmed?
No, not yet. Trump nominated E.J. Antoni, who's known as a conservative economist and a political ally. He's currently chief economist at the Heritage Foundation.
But the Senate hasn't confirmed him.
Not yet. And there was some controversy around him, too, reports about a deleted social media account, and he'd apparently floated the idea of maybe moving to quarterly jobs reports instead of monthly.
Quarterly reports, that would be a huge change.
It would. Though a White House official did state that wasn't his official stance as the nominee.
No.
But for now, importantly, a career official is serving as the acting commissioner.
And that's key, because it means the August data was released without direct political control, right?
Oh.
Even if the numbers weren't what the president wanted to hear.
Exactly. That continuity, having an independent career official oversee the process, ensured the data wasn't, suppressed or altered, which in a way makes these August figures even more powerful in challenging the administration's narrative.
Okay, so the integrity seems okay for now, but the numbers themselves are concerning. That forces us to ask, what are the economic forces driving this? What policies might be playing a role here?
Right, and linking back to what we discussed, many analysts are now pointing pretty directly at specific economic policies as being key drivers of this slowdown. 8 months into this administration, the combined impact of high tariffs and the ongoing mass deportations seems to be putting noticeable, maybe even intense pressure on employers.
These aren't just abstract things, they're having real effects.
It appears so. These are policies with direct, measurable economic consequences that are starting to show up quite clearly in the data, according to these analysts.
Okay, let's break those down. First, tariffs. The argument is often that they protect American jobs, right? But the data seems to show something else, particularly in manufacturing.
That's a really important point. Let's think about what tariffs actually are. They're essentially taxes on imported goods. So when President Trump put these tariffs on nearly all imports, businesses bringing in materials or products faced higher costs immediately.
And higher costs for businesses often
Usually mean higher prices for consumers. Companies tend to pass those costs along. So you see prices go up for everyday items, for raw materials. Even if the goal is protection, the immediate impact reported here is rising costs and, paradoxically, job losses in sectors like manufacturing that were supposed to benefit.
And we're seeing that loss directly in the numbers.
Yes.
Manufacturing lost 12,000 jobs in August alone. And that's not new. It's the fourth month in a row of losses.
Yeah.
Adds up to 78,000 manufacturing jobs lost just this year so far.
That's right. And you hear from companies like John Deere reporting lower sales and saying tariffs would cost them something like $600 million.
Wow.
Even manufacturers who need imported parts are facing higher costs, making it harder for them to compete. It's like a squeeze from multiple directions.
Okay, so that's tariffs. What about the other factor you mentioned, the immigration crackdown? How does that play into the jobs picture?
Well, the immigration crackdown seems to create a kind of double challenge for businesses. On one side, it's making it much harder for many sectors to find workers. Think about agriculture, construction, hospitality industries that often rely on immigrant labor. They're reporting shortages.
So a labor supply issue.
Yes, but it's also a demand issue. Fewer people overall can mean reduced consumer demand, fewer customers buying goods and services.
Okay. So it shrinks the market.
Exactly. It puts a sort of double squeeze on businesses already dealing with those higher costs from tariffs. It shows how changes in population driven by policy can have these immediate, broad economic effects.
And besides tariffs and immigration, were there other factors mentioned in the report?
Yes, federal government employment itself actually went down by 15,000 jobs in August. So that's a direct cut.
And then there's just uncertainty.
Exactly. That's a big one. The uncertainty around policies, tariffs changing, regulations shifting, it makes corporate executives really hesitant. An economist, Rebecca Patterson, was quoted saying companies are being very cautious about adding personnel simply because the economic outlook is incredibly uncertain.
Makes sense. If you don't know what's coming next, you hold back on big commitments like hiring.
Precisely. They pull back on hiring, on investment. It creates a drag on growth.
And this isn't just theoretical, right? It impacts people's daily lives.
Absolutely not theoretical. For many Americans, these numbers, these trends, reflect a very tangible, sometimes painful reality. We're expecting inflation data next week, and the projection is that consumer prices probably rose more quickly again in August. Companies are passing on those tariff costs.
People are feeling it already.
It seems so. Consumer sentiment has weakened, partly because people expect higher prices, but also because they're seeing it at the checkout,
Yeah, we've actually heard some direct accounts that really illustrate this. People reporting things like their grocery bills going up $40, $50 a week, even though they're buying the same amount or less.
That's significant.
Others saying their basic monthly expenses jumped maybe 17% just since June without them actually buying more stuff.
Wow. Just the cost of existing going up.
Exactly. And things like home insurance. One person mentioned their premium rocketing from $3,600 to $8,000 a year. They attributed it directly to tariffs and inflation.
That's a massive jump, hard to absorb.
And we heard from a former federal worker, laid off under the new administration changes, found a warehouse job that says it barely covers the bills. They're having to ration groceries.
These stories really put a human face on the data, don't they? It's not just numbers on a page, it's real families making incredibly difficult choices.
It's a stark reminder that these big economic policies have very direct, often painful, human costs.
And if we connect this lived reality back to specific sectors, think about agriculture. Often seen as a strong base of support for the administration, right? But they're under immense pressure. China put that boycott on U.S. soybeans back in May, and it's hitting Midwest farmers incredibly hard.
We're hearing reports of.
Reports of potential mass bankruptcies. One source even described farmers as, quote, begging the big bad government for assistance.
That really highlights the painful consequences of policies like tariffs, doesn't it? Especially when they provoke retaliation. Definitely doesn't sound like a golden age for them.
Not at all. It shows that profound ripple effect.
And the overall job market struggles are showing up in other ways too, right? Beyond just the headline unemployment rate.
Yes. There's a metric comparing the number of unemployed people to the number of available jobs. Right now, the numbers show there are actually more people officially unemployed, about 7.24 million, than there are open jobs, around 7.18 million.
More unemployed people than jobs available. When was the last time we saw that?
Not since April 2021. It suggests the labor market is getting tighter for job seekers, looser for employers perhaps, but overall a mismatch.
And are certain groups feeling this more acutely?
It appears so. The unemployment rate for Black workers specifically rose to 7.5% in August. That's the highest for that group since October 2021. Analysts suggest this might reflect a disproportionate impact from things like the federal job cuts we mentioned, and also the broader slowdowns driven by tariffs.
And long-term unemployment.
That's also up. The share of people who've been unemployed for 27 weeks or more is at its highest point since February 2022.
So people aren't just losing jobs, they're staying unemployed for longer.
Exactly. These are not signs typically associated with a booming, healthy, inclusive economy.
Okay, so the data seems pretty clear, if concerning. How is the White House responding to this? Are they acknowledging the slowdown?
Well, publicly, not so much. Officials like Kevin Hassett, who directs the National Economic Council, largely downplayed the report's significance. He called the numbers a disappointment, sure, but then quickly pivoted, predicting future upward revisions, talking about tech investments, tax cuts.
Trying to shift the focus to the future.
Pretty much. And President Trump himself made claims like the real numbers would arrive in a year from now when new tech sites open up. He promised job numbers like our country has never seen before.
So essentially dismissing the current data and promising future greatness.
That seems to be the strategy, yes. A clear attempt to spin the data and maintain that optimistic narrative despite the numbers.
But what about economists outside the White House? What's their take?
Well, their consensus is considerably less rosy. Most economists don't seem to be forecasting a full-blown recession anymore, which is maybe some good news. But they do generally expect a sustained period of faster inflation combined with slower economic growth.
Stagflation light, almost.
Sort of, yeah. Especially with those higher taxes, the tariffs, now impacting imports from over 90 countries. It creates a drag. Their outlook definitely contrasts sharply with the official White House spin, suggesting a more challenging road ahead.
Which brings us, inevitably, to the Federal Reserve. What does all this mean for them? They're at a tough spot, aren't they?
They really are. Think about the Fed's main job, their dual mandate. They're supposed to keep both unemployment and inflation low.
Maximum employment and stable prices.
Exactly. But right now, you have unemployment ticking up, which argues for potentially lower interest rates to stimulate hiring. But you also have inflation edging upward, partly because of those tariffs, which argues for potentially keeping rates steady or even higher to cool prices down.
So cutting rates could help jobs, but might make inflation worse.
That's the dilemma. It's like trying to push the accelerator and the brake at the same time. They're caught between conflicting signals.
But given how weak this August report was, what's the expectation for their next meeting?
Despite that difficult trade-off, the consensus is pretty strong now. The weak August numbers make an interest rate cut by the Fed this month. Their meeting is September 16th and 17th, almost a certainty.
They feel they have to act on the employment side.
It seems the immediate concern about a cooling job market might outweigh the inflation worries for now. Some experts are even calling for more cuts beyond this month, warning about needing to prevent a potential layoff economy.
And all this is happening while the Fed is under political pressure too, right?
Absolutely. That's another layer of complexity. President Trump has consistently and very publicly blamed the Fed and Chair Jerome Powell for any economic turbulence. He's been pushing hard for faster and deeper rate cuts.
Well, the Fed worries his policies might be fueling inflation.
Exactly. Fed officials have expressed concern that policies like tariffs could actually cause prices to spike, making their job of keeping inflation stable even harder. It really underscores the importance of their independence in navigating these pressures.
Okay, so let's try to wrap this up. We've taken a real deep dive today into these August job numbers. We've uncovered this clear cooling in the labor market, looked at the political storm swirling around the independence of the BLS itself, and we've explored the very real pressures from policies like tariffs and deportations, how they seem to be impacting both businesses and workers. We've heard how these abstract numbers translate into a pretty stark economic reality for many everyday Americans.
Yeah, ultimately, I think this deep dive into the August jobs report reveals more than just a set of statistics. It really does feel like a challenging turning point for the U.S. economy. It demonstrates pretty clearly how policy decisions can have these immediate, tangible, and often quite difficult human consequences. Consequences that are becoming harder to just, dismiss or spin away with optimistic rhetoric.
So as we look ahead, maybe a final thought for you, our listeners, to consider. In a world where economic data that's supposed to be objective, can apparently be so easily dismissed or politicized, how do we, as informed citizens, make sure we truly understand the economic landscape? How do we see past the headlines and the political narratives? And maybe even more fundamentally, what role does the basic integrity of that data play in shaping our collective future and the decisions we make based on it? Something to think about.